Hi and good morning. My name is Jane Simpson and I'm the MD of TBMC, the business mortgage company. For anybody who doesn't know us, TBMC are a buy-to-let specialist and we're there to help support brokers to place buy-to-let business and progress those really difficult applications that you might come across through to successful completion. As a business, we pride ourselves on being able to assist in placing all types of buy-to-let business. And our specialist knowledge and range of lenders and products means if your deal can be placed, we'll have a home for it. We have options from the high street, your vanilla lenders, but in general, most brokers tend to use us for the more complex buy-to-let, things like semi-commercial as well, and we also have a full commercial option. The marketplace has changed a great deal for buy-to-let in the last couple of years. And let's kind of touch on why it's become so difficult for many brokers. Over the last few years, there's been a number of changes in the buy-to-let marketplace, which has made buy-to-let very complicated and difficult to achieve what the landlord is looking to do. We saw the stamp duty levy, which actually added an additional 3% onto second homes or buy-to-lets, and that's meant for the initial purchase of property, it's far more expensive for landlords to fund, obviously unless they go for a cheaper property. And then following that, we saw the tax relief taper for mortgage interest, causing landlords' tax bills to rise. So obviously financially, landlords have been hit twofold from this kind of financial perspective. But that wasn't all, so changes in the marketplace continued. In addition to the financial hits, the PRA changes were also implemented. The first phase of the changes introduced a minimum rental calculation. Now, these were put in place to protect landlords and ensure affordability. However, many landlords that we speak to actually find them really restrictive, as they're restricting the amount that they can borrow and preventing them gearing up their portfolios or purchasing the properties that they want to purchase because they're really restricted by the rental far more than they were historically. Phase 2 then added in the underwriting changes. So it was, I think, 8 months on from the rental calculations, and everyone was just managing to kind of truck on and get through that. And then we had the underwriting changes, which required lenders to carry out a more in-depth underwrite for professional landlords. Again, these were put in place to protect landlords and to make sure they could afford the property not just on the day of purchase, but that they were going to be sustainable and able to look after that property on an ongoing basis. However, what it's done is it's made the underwriting application process more difficult and far more lengthy. Landlords are now required to submit more information, more paperwork, and underwriters in lenders are required to actually take a more in-depth look at that, and they're asking far more questions as well. This is something that's completely different to the old way of buy-to-let lending, where we were really just looking to make sure that the landlord had a minimum income and that they were able to prove that and prove the rental. Now we're looking at things like business plans and forecasting, and depending which lender that you go with, it can look very different lender to lender. So it's quite a more complex way of doing things, and landlords, I think, are feeling that that's a little bit difficult, and they're taking a while to get used to that. The buy-to-let market has seen a contraction, which I would say in the main has been a result of these changes. Obviously, we've got Brexit as well, which is having another effect on landlords and whether they want to purchase new property. And until we know what's going on with Brexit, there just seems to be a little bit of a standoff and requiring new properties. So the remortgage market is really strong in buy-to-let, but actually the purchase side of things has slowed down a little bit. However, on a positive note, the private rental sector is still really strong. Housing shortage continues, and with almost most under 30s renting, and it's very difficult for people to get on the housing ladder these days, rented property is really essential in the UK, and landlords recognise this. I think what we have seen is the traditional dinner party landlords maybe thinking twice with the extra cost and it becoming more difficult to acquire those properties. They're perhaps thinking that isn't a good one-off investment, but landlords that are out there to run portfolio businesses are in it for the long haul. But what we are seeing is they're looking at ways to kind of get through this period and make their buy-to-let portfolio work for them. We've also seen a number of new lenders coming into the buy-to-let market space. So there's far more competition there, which is a good thing because it's pushing prices down and it's making lenders look at their criteria and go into other niche areas. So it means that actually the buy-to-let lenders we've got out there now, I think we've got about 40 lenders on panel. Our panel has actually grown from about 20 to 40 in the last 2 years, and that's not because we wanted to have a huge portfolio of lenders, but it's because we've come across niches that we think are actually a little bit underserved. So we've gone out and looked to see what lenders can help us to fill those gaps. And we give business to almost every lender every month because we're using just a vast range of lenders. So it's definitely driving a more competitive environment and pricing, which is a good thing going forward. The buy-to-let market has evolved from a rate-driven marketplace because of all these changes. Historically, most of our calls coming in, the first question would have been about rate. What's the cheapest rate? What's the lowest fee, etc. But now we're seeing far more criteria-led inquiries coming through. So there'll be criteria to do with either the property or the landlord, and then rate is far more down the line when we're looking at what is going to be suitable. And this has been driven by landlords finding new ways to maximise earnings and actually grow their portfolios. So we're seeing things like older landlords as well. They're now looking to keep their portfolios, so they don't want to actually sell them. They want to keep them as a pension fund. Or also what they might want to do is just pass it on to their children. So they're not wanting to actually sell up. And we've seen far more lenders moving into this area in the last probably 2 years. With many lenders having, you can apply after 80, and we've even got one lender that goes up to about 130 as a maximum age. So that is an area that is growing. We've also seen a lot of geographical changes. So historically, it would have been the south that would have been your dominant area for buy-to-lets, but now we're seeing far more properties being brought in the north. And that tends to be because you can pick them up at lower prices, so they're better yielding properties. So landlords are able to get the full 75, 80 or even 85% loan to value that they want on those properties. They have to put far smaller money down to start with to purchase the property, and it just means that they're perhaps even able to buy a couple of properties rather than what you would get for one in London. So we're seeing a lot going up in the kind of Manchester area where there's student villages, and lots of just general sort of more north dominant places. So other ways that landlords and buy-to-let are evolving. Properties which yield higher are really attracting landlords at the moment. So landlords are looking at things like HMOs, but perhaps picking them up that it's not actually a HMO yet, and they're going to do the conversion and they can put extra renters in there and they can then get a higher rent from that. It could also be properties that need renovation or refurbishment, so something that is a little bit run down or actually needs to be knocked about a little bit to get it into a suitable state for letting. And also auction properties as well. Obviously landlords can go in if they're able to purchase at auction and pick properties up. So we've actually just launched a bridging proposition, and that's not because we see ourselves as being a bridging specialist. We will always be a buy-to-let specialist first and foremost. However, we really feel that bridging is going to be something which will enable landlords to actually purchase the properties that they want and go on to a first charge at a later date. So when picking up a property that isn't currently let out as a HMO, but they want to do that, there will generally be a license to apply for and some work that needs to be done to the property. So what we can do is we can help you or your client to purchase that property on a bridge. But at outset, we will already decide who that's going to go on a first charge with. So we'll actually progress the 2 applications at the same time. We'll get an idea of timescales from yourself and the landlord to know when they think they'll be able to actually complete those works and switch it over. And we can start the application process for the first charge mortgage in line with that. Depending on timescales, we might be able to use some of the documentation twofold. So if you're asking for proofs on the bridge, we might be able to cross-reference those over, so it saves asking for a full set of documentation for both applications. And we'll do everything we can to make it as seamless as possible. And of course, then as a broker, you would get paid on both of those deals, but you'd only have to deal with us, and we'll be able to facilitate both of those going together. And the same thing would apply if you were looking to purchase something that needed refurbishment or something that was being purchased on auction and they needed to have the cash day one. Many landlords are looking to set up limited companies now, which can be beneficial from a tax status and also from a rental calculation. Obviously, this is something they would need to get tax advice on, but we are able to. We have many lenders that have got limited companies, and I think give an estimate of our business has gone up by about 25% from about 2 years ago. It was 4% of our business, and now it's about 25 to 30% of our business on limited company. We're also actually seeing a lot of landlords still undecided which way they're going to go, so we're getting many calls from brokers who are saying that their clients are thinking about setting up a limited company for new purchases, but maybe keeping their existing stock in their personal name, so they're almost straddling the fence and seeing which one is going to work out best for them. And obviously, as the tax changes are come in on a sliding scale, there may be landlords that actually are better off now in a personal name, but in a year or two they might be better in a limited company. So this is definitely an area which is growing, and we are able to help you and your client to find the best lender for limited company lending. Something else we're seeing a bit more of is semi-commercial properties. So for example, a block of 3 flats that maybe has a shop underneath. And this actually eliminates the need to pay the extra 3% stamp duty if there's any commercial aspect to the property. And this seemed to go a little bit under the radar, but landlords now seem to be catching on to this, and they can still go for a property that is primarily buy-to-let if there's a few flats in there, but they can take and rent out the shop as an extra, and it obviously avoids that initial 3% stamp duty. And holiday lets are also becoming far more popular with the new sort of Airbnb arena that we find ourselves in. And these are all areas that lenders are recognising are being utilised and used by landlords, and they're starting to be more lenders actually offering borrowing in these areas. And of course, 5-year fix has become very popular. The rental calculation on 5-year fix has a lower minimum requirement than the 2- and 3-year option, so that does mean that clients are often able to borrow a fair bit more on the 5-year rates. So how can we help you? Well, we've got an expert team who are there to support you. It's completely free. All they do is buy to let. They're all CMAP qualified, so you can ring through and know that you're speaking to somebody who is a qualified mortgage broker, but they're actually there and they only deal with buy to let, so they're very, very experienced. It's all they do day in, day out. So they can do all the legwork for you, and we can literally do as much or as little as you want. So should you just want to ring up and ask a quick criteria question, that's absolutely fine. But actually, if you find that buy-to-let isn't something you even want to deal with at the moment, or this particular case is going to, the amount of work you're going to put in is perhaps going to far outweigh the fee that you charge, we can deal with the landlord on your behalf for you. So it's completely up to you how much you want us to do. We've also got a free buy-to-let sourcing system. Now you may well use Trigold, Mortgage Brain, 27 Tech and any of the other sourcing systems, but you can use ours in conjunction, and the reason why you might want to do that is because you can source on rental calculation. You can also source on tax bracket, which many brokers find really helpful if they've got that higher rate or additional rate taxpayer. It'll only show you the rates that have got that fit on those higher calculations. And we've got lots of limited company offerings, and basically every niche that there is in buy-to-let, we've got a lender to fill it. We've got a newly launched application form, which is an online application form. So it's quite a seamless and easy way to apply. So if you speak to our help desk, they'll send you a hot link for the rate that you want to go on. If you click that, it'll go straight through to the application form and pre-populate that, and you just need to put your client's information in. We've also got many limited distribution lenders, so many of your challenger banks that are entering the market will do so on a limited distribution basis, and we have many of those lenders on panel. And we also negotiate exclusive rates whenever we can, so rates that you perhaps wouldn't be able to gain access to directly, or even sometimes certain criteria elements that a lender is just testing through small distribution. We've also got on-site underwriters for a number of our lenders, which is really, really helpful. So if you've got a particularly difficult case, we can actually get the underwriter to have a look at it before we even apply, and know that that underwriter is going to be in every week to work on that case. So it's not a case of different people picking up the cases and having different views on it. There's real continuity with the lenders that we've got on-site underwriters, and it means you can have that face-to-face conversation on your behalf. We can sit down with them and talk through the case, which goes a really long way to getting the complicated cases through, and a kind of a seamless transition for those. And you get the bulk of the proc fee. We charge a $299 application fee, which we send out for when we ask for the valuation fee, and most brokers charge that to their client, and that's only payable after successful dip. So all of our help and service up to that point is absolutely free, including the sourcing system. As I mentioned, the sales team are all CMAP qualified, and I think that goes a long way to know that you're dealing with professional people. They've got a wealth of knowledge in the buy-to-let sector. All day long they take incoming calls from brokers, and anything they don't know the answer to, they go and seek. So if you phone through and we don't know the answer to something, we will literally phone every single lender on our panel, and we will find out who will or won't do that, and then we save that information for future. So it's a continuous learning curve for us as well. The team actually have to put a lot of work in to keep us on top of their buy-to-let game as they are, and we completely see how difficult that must be for a broker that actually has other things that they need to stay on top of, like residential and other products. And that is really where we're evolving and making ourselves the broker for brokers, that we can help you to keep your buy-to-let business coming through, not having to turn it away to other brokers, but actually not needing to spend all those hours sourcing. We've got a really large lender panel. We would class ourselves as being whole of market, because apart from those smaller building societies that are postcode restricted, we pretty much have every lender on panel. And we've built this up over the last couple of years to fill a niche. So every week we do a report internally about which cases came through that we couldn't actually fit. And if there's anything that we think a deal that could have been done or should have been able to be done, we'll go out and we'll seek lenders that would be willing to look at that. So we may well approach lenders and see if it's an area they would like to go in, and offer that on a restricted distribution basis. Or we just look for lenders that already offer those, and we bring them on board, so that we're always plugging those gaps. As I mentioned, we've also recently taken on a bridging panel, and that is just really there to facilitate your clients to purchase their buy-to-lets. And another thing that we've actually seen it become useful for are with the new HMO laws. So we've had a couple of remortgages that have come through, and when the valuer goes out, you suddenly find that one of the rooms in the property is too small to meet the new restrictions, or actually it needs a license and it doesn't have one in place. So rather than that whole application falling down, what we can do is we can stop it there, we can bridge it. Your landlord can go away, maybe knock a partition wall down, do some slight interior renovation to make the room large enough, or apply for that license, and then we can re-pick up on the first charge buy-to-let once that's all sorted. So it actually means that your client is still able to proceed. It might take a little bit longer, but it stops the deal for the remortgage from falling through, and often those remortgages are to facilitate a further purchase. So we can also look at a bridge to facilitate that purchase, to ensure that goes through as well, and tie it all up so that at the end it all gets redeemed and they get the deal that they wanted. All of the rates that are offered by lenders that we take on panel are on our sourcing system, and we keep this up to date ourselves on a daily basis. It's completely free, and as I mentioned earlier, you can source on, it's buy-to-let specific, so you can source on rental calculation, you can source on tax bracket. You can look at just the rates that fit, or you can also look at the rates they don't fit. And if you see the final three columns there, the deposit surplus, rental surplus and additional borrowing, that will actually tell you whether or not you could borrow any more, or how much extra money you needed to put in. So if you look at the third deal down there, when it's got 46 in red, the rent would need to be £46 more in order to meet that deal. Otherwise you would need to reduce it by £6,936. So that becomes really useful when you've got those near miss cases. And we can actually then have a look at that and say, well, actually, if you look at the fifth one down, they're only £3 off on the rental. So really, could the landlord afford to put his rent up by £10 in order to get the deal? Or would he just be happy to take £486 less? So you can have those conversations with landlords, and you'll know which rates they fit on naturally and which ones they might just need to tweak slightly. So it's a really helpful tool when talking to your landlords, and then you can also use your other sourcing systems in conjunction with it. And I've talked a lot about the sales team, but also we have a really experienced processing team as well. So once your application comes into us, the processing team will help you get it right first time. So we spent quite a lot of time with lenders after the PRA 2 rules came in with regards to underwriting. We feel that we really understand what every lender needs and what that needs to look like, and what type of additional questions they might ask if something comes up, for example, in bank statements. And we try to preempt all that at the start. So whilst it might sometimes feel like we're asking a lot of questions up front and for a lot of information, what that does mean is when that goes to a lender, it stops the to in and fro in, and it means that we can get it right first time for you. We've got a wealth of experience with dealing with all of these lenders. As I said, we actually put applications through every month to almost every lender that's on our panel. So the team are really used to what that needs to look like, and we can help you to get it right first time with your client. We do operate a priority service for brokers who work with us and send through a full set of supporting documents in one go. So we'll send you out, once the dip has gone through and it's successful, a list of documentation that lender would need. And if you send all of that information in one go, your case will go to head of the queue. Obviously, you're quite welcome to send things through in bits and bobs for us to review, but if you've got that full case, if you've got that urgent case and you get everything together and you send it to us, we will pull it through and push that through as a priority for you for working with us and making everyone's life a little bit easier. Obviously, if you've got a specific document in there that you need us to cast an eye on, we will do that, and we can refer things through to lenders before we submit as well, just to make sure that when we do finally submit it, we've got everything covered and the case is going to go to offer as quickly as possible. So in summary, we're an expert in the buy-to-let market, and we're there to support you to place your buy-to-let. We've got the free sourcing system and also the free help desk, and I really urge you to ring up and use the guys and try the sourcing system. You just need to go onto our website and you just need to register for the sourcing and quotation system, and I think you'll find it a really useful tool. We get access to exclusive products which aren't available in the general marketplace, and we have dedicated underwriters and enhanced service standards with many of the underwriters as well. So it really helps when getting those cases through and knowing what you need to provide. And I'd just like to thank you all very much for listening. And if you've got any questions, do let me know and I'll hope to answer those for you.